Joining me now to talk all things housing is Katie Hubbard. She is the Executive Vice President of Capital Markets at Walton Global. Good to join. Thank you for joining, Katie.
Thanks for having me, Trinity.
Now, as I mentioned, fresh housing data will be released at 10 a.m. Investors will be closely watching this. What are you anticipating the results will be?
Yeah, so December numbers were up 2.2%, and we're anticipating that could be down just because listings were down about 5% in January. So it'll be interesting to see what the data comes out at 10 a.m.
And home builder sentiment just hit a 5-month low. What do you think is driving this decline, and how concerned should we be about it?
Yeah, so Walton, we are a land investment company and we feed land to public home builders. We have about $1.8 billion of land under contract with public home builders. And even though the numbers are reporting lower, it's just they're showing lower February traffic in their community. So they're really being cautious going into spring selling season, not wanting to be sitting on too much spec inventory. But as far as dropping contracts, we don't really see it slowing down at all. In fact, our clients like D.R. Horton and Lennar are full steam ahead.
And housing starts fell nearly 10% in January while building permits held steady. What does this tell us about the market's direction overall?
Yeah, I think it's just that the builders are being cautious going into spring selling season, in addition to the immigration news that we're hearing quite a bit about. Right now, 89% of our clients, the public home builders, are not reporting any type of labor shortages or effects on the immigration policies. And then, of course, tariffs. We've been hearing quite a bit about tariffs, and they're anticipating maybe home prices going up $5,000 to $8,000 in that entry-level home price. But with the margins that they have and the incentives that they can offer to new home buyers, like buying down mortgage rates, we're seeing that they're going to be doing quite well, and the housing market should fare well in 2025, not down too much.
I want to dive into the tariff aspect a little bit further. Now, if the Trump administration revisits tariffs on Canadian lumber, how significant will the impact be on new home prices?
Yeah, so we've been to quite a few conferences and are talking to our clients daily. They're really not too concerned. A lot of them are trying to adjust their supply chains. They're already doing that ahead of the tariffs, bringing some of that in-house. They're also looking at new innovative ways to build 3D printing. I mean, D.R. Horton, is partnered with Boxable, so they're definitely staying ahead of that just in case the lumber prices are going up.
And what markets are home builders investing in for 2025 and beyond, and what's driving those decisions?
Yeah, so definitely, you've seen hurricanes and, the fires in LA are driving insurance prices up. So home builders are looking to where people are still wanting to go. They're chasing affordability, population growth, job growth, quality of life. So we're actually seeing builders moving into tertiary markets like Minnesota and Louisiana, where land prices are still relatively affordable and they can build without the issues of natural disasters.
And on the topic of affordability, it's still a major challenge out there. What do you think needs to happen to boost supply and efficiency in home building overall?
Yeah, definitely mortgage rates. People are settling into the mid sixes, so we're seeing an increase of activity. Also, home builders are buying down mortgage rates to keep the homes affordable. But I just think innovation and increasing the supply, also building smaller homes. And what we're seeing is that there has been a decline in birth rates. Women are having children later, if at all. They're having fewer children. So just smaller families leads to smaller homes. There's also a surge in people that are retiring that don't need the homes that they once had when their children were living in a home. So now home builders are adjusting, building communities where you can be multi-generational, have townhomes for the young families. They're putting in amenities for the grandkids, pickleball courts for the grandparents. So really they're adjusting to that smaller home and more amenitized communities.
And of course,
that will help with affordability.
And of course, interest rates are in focus. Investors are closely watching that, as well as home owners and home buyers. Given the current conditions, when do you think that we could realistically see interest rates start to come down?
The interest rates, when consumers hear that the Fed's dropping interest rates, they think that the 30-year fixed is going to drop. But really, the 30-year fixed is tied to the 10-year Treasury, which is really driven heavily by inflation. So until we see inflation numbers come down, rates really aren't going to be dropping. So we don't think below the mid sixes in 2025 is going to happen.
Would you say that supply chain issues or labor shortages are still major hurdles for home builders right now?
I mean, with potential mass deportations, especially in the southern states where 2/3 of laborers building new homes are undocumented immigrants. I mean, there definitely, with increased deportations, could be a labor shortage that could affect home prices and affordability even more.
And how do you think that home builders or builders overall are adjusting their strategies in response to higher costs, changing demand and trends, and also the shifting market dynamic?
Yeah, what we're hearing is a lot of them are trying to bring that supply chain in-house, and so they're, creating their own fencing companies, their own window companies. They're bringing the trades in-house instead of having to go out into the market to subcontract.
What else should be top of mind for home buyers and home builders for the rest of 2025?
Yeah, I mean, I just think that the short term is very bullish for home building because we have 4.8 million people entering that really first time home buyer age, where the first time home buyer today is 38 years old, where in the 90s it was 28 years old. So we're having an increase of population in that age segment. Also, about 2 million more move up and luxury buyers are going to be moving into their prime years. And then, like I mentioned, 14 million people 65 and plus that are going to be looking at retiring and going into smaller homes and more active lifestyle communities. So we're very bullish on home building in the near term, with fewer birth rates in the future. I mean, in the next 10 years and beyond, there could be some headwinds for the demand.
Katie Hubbard, EVP of Capital Markets at Walton Global. Thank you for joining us.
Thanks for having me.